Good afternoon, my fellow traders. My name is Michalis. I'm one of the market analysts here at HFM, and I'd like to welcome everybody to another live analysis session where we're going to be looking at major events, not only which have taken place just only a few seconds ago, but also events which will take place throughout the rest of the day and over the next coming days, which are going to create a lot of volatility. We've already seen a lot of volatility. We've also seen some really steady sideways price movements. And the events from today and from tomorrow and Friday can see those range bound trading conditions being broken out of and no longer honor those resistance and support levels. So these are all factors that we're going to be looking at as part of today's webinar. Now, I'm actually going to, instead of go straight to the MT5, I'm going to show you how you can get access to our economic calendar very quickly. It's for free and it has the economic releases from many of the major countries within the financial trading markets. So just by going onto Google, typing in HFM, clicking on our website, if you go to tools and education, of course, number one, we've got a lot of educational tools. We have also trading tools which are available as well. There's a lot of information which is available. Now, when you're looking at that, ladies and gentlemen, here on the right side, under the section which says news and analysis, you will see there is the option for an economic calendar. If you click on the economic calendar, it will take you to the economic calendar, which again is provided to you for free. Now, if we filter it to show only today's announcements, and you can also click on filters, and I'll actually unclick all of the countries and I only will add here the United States of America. Very simply, ladies and gentlemen, because if you look at the United States of America, it is the main driver today and also over the next 3 days of the financial trading markets. Now, what has been released so far? There's been 2 major releases, and what has actually been released has shocked the market because it's significantly lower than that which was expected, and also yesterday's data was significantly lower as well. So if we look at the past 2 months, there's been a lot of talk from economists, from analysts like myself, and generally speaking bankers, which are advising that the economy now is at a greater risk of seeing a recession. Now, depending on what economist you are looking at, some economists such as Larry Summers has said that it's 50% now that there's going to be a possibility of there being a recession in the United States of America. Others have said 30%, others have said something between 30 and 50%. So there's many different types of expectations. Nonetheless, though, across the board, across the whole of the market, the possibility of a recession has grown. That, of course, has certain domino effects on the stock market, on gold, on the US dollar, and on interest rates, which is one of the biggest influential factors in the financial trading markets. So this is what we're going to be looking at, because we need to understand this to be able to determine how the market is likely to make certain decisions, and that will affect, of course, the order flow, which will affect supply and demand, which is going to create the volatility that gives traders like ourselves the opportunities within the financial trading markets. So what was released yesterday? Yesterday, ladies and gentlemen, the US released 2 sets of information. The first information was that something known as the job openings. Very simply, it just confirms the amount of new job openings over the past 30 days in the previous month, basically. That was significantly lower than we have seen over the past few years, and it was lower than that which was expected. Today, just only a few minutes ago, we had the ADP employment change. We were expecting 108,000 new employed individuals in the month of March. That didn't come in as expected. It was already expected to be lower than the previous month. Nonetheless, it came in 62,000. Now that's less than half of what we saw in the previous month. And if we look at the gross domestic product, the GDP, which is actually the figure which is used to confirm if an economy is in a recession or not, that was expected to come in at 0.4. It actually came in at minus 0.3, which is something main headline, should we say, within the market, because we've had one quarter now where we've seen the economy decline. We're now in economic contraction, basically. If we see a second quarter of economic contraction, then we are officially within a recession. There's no longer a case of us discussing, are we going to see a recession or are we not? We will definitely be in a recession. So this is a major factor within the market. What is also going to be released now, ladies and gentlemen, within just over another hour, is the core PCE price index. So you can see it here, the core personal consumption expenditure price index. In the financial trading markets, we just know it as the PCE price index. That's actually one of the preferred indexes of the Federal Reserve. It's basically a measure of inflation, but only looks at goods and services which is mainly being used. So, for example, in a recession, not many consumers are buying Wagyu steaks because they're extremely expensive. The CPI will still take it into consideration because it's a fixed basket of goods and services, whereas the PCE price index only looks at those which are still being bought under the market, current market conditions. So that's something which is extremely important. It is expected to decline from 2.8% to 2.6% on a monthly term. In terms of monthly, should we say month on month, it's expected to rise by 0.1%. Now, this piece of information that we've seen here, the ADP price index, the gross domestic product, yesterday's jobs openings as well, is something which is extremely negative in terms of the economic outlook. Now, there's two things that the market could take into consideration. Before we go look at that actually on our charts, we can also look at it on a live market as well. So let's look at the NASDAQ. Now, this is the NASDAQ, ladies and gentlemen. The NASDAQ has significantly dropped in value. It's understandable that the NASDAQ's dropped in value because there's now a serious fear of a recession. If we look at how much the NASDAQ has dropped in value, if we take the actual full impulse wave, the impulse wave from the high to the low, ladies and gentlemen, so we're talking about just in 2 hours, the NASDAQ has declined by almost 1.5% just in the space of 2 hours. If we look at the actual announcement itself, so how much price movement have we seen since the announcement? The price has declined by 0.60% just in the case of 10 minutes. So a lot of volatility, ladies and gentlemen. Why are we seeing that volatility? Because there's a lower risk appetite within the market now, because the market believes that there is going to be a higher possibility going forward of a US recession, and of course, in turn, a global recession as well. Don't forget that if we're going to get a US recession, then there is a possibility of that having a ripple effect throughout the global economy as well. Now, I've got one individual here who says, can it rebound? Okay. Now, of course, it can rebound. Actually, a lot of the time when we get news announcements, because of the volatility, we do get sometimes either a retracement or correction. Now, the rebound will massively depend on what's going to be released over the next 24 hours. Specifically, I'll be more specific, not just the next 24 hours, but in an hour and 1 hour and 20 minutes. Because in 1 hour and 20 minutes, we will get the PCE price index. Now, if we look at the PCE price index, ladies and gentlemen, which is the reading of inflation, one of the biggest influences of the NASDAQ is actually interest rates. High interest rates can cause a stock market crash. Low interest rates can actually bring back investor confidence, because if interest rates are declining, very simply, our mortgage payment declines, our credit payment declines, rent tends to decline as well. Savings don't perform as well. And what actually happens is consumers tend to spend more. When consumers spend more, ladies and gentlemen, the stock market and these companies perform better. It's as simple as that. So now that we've got a fear of a recession, okay, put it very, very plainly, very simply, a fear of recession, which is now really starting to materialize. We look at that fear of a recession, and then we now have to think about the Federal Reserve. The Federal Reserve has said that they're not going to cut in May. They're reluctant to cut. They want to pause. They want to hold on a little bit more because they want to see what's going to happen, because there's a 90-day pause now in terms of trade tariffs. They want to see what's going to happen in terms of the global trade market. Based on that, ladies and gentlemen, of course, their interest rates are not going to decline. But we've had a set of data now from yesterday and today, which is really going to pressure the Federal Reserve to say, I understand you want to pause, you want to have certainty before you start to take a more dovish stance in the monetary policy. But at the same time, the economy cannot hold up with interest rates this high. If the core PCE price index comes in lower than expected, so for example, if it's going to drop not from 2.8% but to 2.5%, then that will open doorways for the Federal Reserve and open a new path for the Federal Reserve to actually cut interest rates, not in July, like a lot of people believe, not in June, like some economists believe they would, but actually in May, like nobody believed they would. So if we are going to see an interest rate cut in May, that can support the stock market. It can bring back some confidence and it can create a rebound. So if we are going to get the core PCE price index decline lower, then that could be a potential possibility that we're going to start to look at areas where the price can rebound. Also tonight, ladies and gentlemen, we also can take into consideration that Microsoft will release their quarterly earnings reports. Also, Meta will release their quarterly earnings reports, and QComs will release their quarterly earnings reports. Those three companies are very influential companies for the NASDAQ because they hold a very high weight. So if we're going to get lower PCE price index and positive earnings data, then of course that can very quickly rebound. At the moment though, ladies and gentlemen, indications is very clearly indicating downward price movement. So let's go to 2-hour charts. Let's go to the NASDAQ. We can see that decline, ladies and gentlemen. Now, the first thing I'm going to do is I'm going to measure recent declines that we have seen. So the decline here is just under 1.5%. The decline here is, let's say, 1.90% approximately. The decline that we're currently seeing, ladies and gentlemen, is just over 2%. So we are starting to come out of that area, ladies and gentlemen, where it's not the traditional retracement that we have seen over the past few days. And also, it's something that we can also see there's a lot of momentum when we're looking at the NASDAQ. Because, look at this impulse wave here, ladies and gentlemen. The impulse wave here, we can see it's an upward price movement, which is measuring over 8%. The next upward price movement is again a strong upward price movement, measuring almost 5%. So quite substantial. But then we can see here, it's not even 2% on that occasion. After a retracement, just over 2%. So we can definitely see there's a lot of momentum there. Downward price movement. Now, in terms of technical analysis, we've got slightly mixed conflicting signals. Number one, we're above our 75-bar exponential moving average. We're above the sentiment line that we can see here. That indicates buyers are still controlling the market potentially in the medium term. Of course, the downward price movement we're seeing so far is short term. It's only been happening over the past couple of hours. But if we're looking at the RSI is below 50, which is indicating that actually sellers are starting to regain control in the market. Even if we increase that to an 18 period, that doesn't change that indication. It's still substantially below the 50. Now, this is acting, of course, as a trend line. So, of course, many traders will say, that we need to be cautious that it's not going to find support here, and we need to be cautious it's not going to find support at the sentiment line. So individuals that are speculating that very strong and lovely, beautiful downward price movement, they have to be cautious out of these levels. Now, there's different things traders can do in terms of that. They can open, instead of one large trade, they can opt to scale in and scale out. So, for example, they may have some longer term take profits, which is maybe somewhere in between these support levels, but they also have earlier exit points as well, just in case it is going to find support at this level here, because it's still an option that it finds support at that level. It's still a possibility, because the core PCE price index, we don't know if that's going to come in lower. If that comes in higher than expected, then that is something in terms of traditional economics, which is very negative for the NASDAQ potentially. In terms of traditional economics, what's actually going to happen, it's a completely different story. Now, how can we back up our signals? Because the signal is downward price movement, but we just need to be slightly cautious. We're not going to find support, especially because of news announcements. I'll actually go to a 3-minute time frame as well. So here, if we go to a 3-minute time frame, just so we can get a real good idea of the sheer downward momentum, ladies and gentlemen. A lot of downward momentum here. Clear breakouts, no matter what breakout we're looking at. If we're looking at this breakout here, or if we're looking at the previous support level, we're far below both. So very clear signals of downward price movements. The latest crossover that we have seen is a downward crossover. That was a crossover we saw all the way up here, ladies and gentlemen. Even if we're going to add a 200 bar simple moving average, which is a very famous moving average for short time frames, especially the 5 minutes, the 2 minutes, the 3 minutes. I'll add that moving average. We can see that moving average here. Let's slightly zoom. There we go. We can see as well why it's important. You can see it finds resistance at that level, support at this level as well. Gives us a very good indication of whether there's a bearish sentiment or bullish sentiment to the price as well. You can see we're far below that as well. So all indications at the moment is signaling downward price movement. I mean, we've been speaking about downward price movement now for 10 minutes, ladies and gentlemen. So, just so you can see exactly what I'm talking about, why I'm talking about it. If we go back 10 minutes ago, 10 minutes ago is here. Just in the 10 minutes that we have been speaking, the price has continued to decline by almost 0.5%. Just in the space of 10 minutes, guys. So that's a substantial amount of price movement. Just so everybody's aware, if there's certain assets you would like me to analyze, of course, we will analyze any requests, of course. Now, how do we validate this downward price movement, though? This is something which is also important to many traders. Now, one thing you can do is you can also include component analysis. Now, there's many theories on component analysis in terms of how many components you should take into consideration. When we say components, we're referring to, if you're looking at the stock market, or should we say the NASDAQ, because we're looking at the NASDAQ now. When you're looking at the NASDAQ, there is components. These are individual stocks. Everybody knows these individual stocks. Look here, Apple, Microsoft, Nvidia, Amazon, Broadcom, Meta, Netflix, Tesla, Alphabet. People know probably 99% of these. Now, if we're speculating downward price movement, a lot of traders will come to the components to back up their signal. So if there's a signal like bearish breakouts, bearish crossovers, if we're trading below our 200 bar simple moving average on the 3-minute chart, whatever it may be, ladies and gentlemen, if we're looking at the components, we want it to back up to confirm as confirmation that indeed that is potentially the price movement that we're going to see. So there's many theories. Some individuals will look at, but there's also individuals that look at the Magnificent Seven. Okay. Now, if we're looking at the Magnificent Seven, to be honest with you, that's only something that has arisen over the past few years. So if you're going to listen to a financial advisor or an established economist, they'll never say to you the Magnificent Seven. That's just a theory that's come about with beginner traders over the past few years. Actual theories, ladies and gentlemen, is they look at the top 10 most impactful companies. Now, when I say the top 10 impactful companies, keep in mind it's the top 11 components. Why? Because there's two alphabet stocks. You've got different classes of stocks. Two of those classes are included. So these top 11 companies there. Now, an even more well-known established is to look at every stock which has an exposure of more than 1%. And you can see the portfolio exposure here. All right, so anything above 1%. So that's basically the top 24 stocks. That changes. Sometimes it's the top 25, sometimes the top 22. That can change. At the moment, it's the top 24. So how many of those stocks, ladies and gentlemen, are increasing in value? One, two, only two stocks. Okay, so if I get a calculator out, we can start to look at how many of those stocks in terms of percentage. 2 out of 24. So 16% of the most influential stocks that hold 1% and above, 16% only are increasing in value. And, to be honest, how much are they increasing in value? If we look at T-Mobile, it's increasing in value by 7 points. That's not enough. Look at these declines, more than 1%, more than 4%, more than 2%. There's significant declines. 0.7%, that's not enough to support the stock market. So that's backing up our signal as well. Now, what also we can do is we can go to FinViz. There we go. Go to FinViz, go to futures, go to performance. Look at the top here. The VIX, also known as the volatility index. Now, what is the VIX? The VIX is actually a risk used as an indication of risk. There's other indications of risks as well. There's also the high-low index for the NASDAQ. That's another indication of risk as well. There's lots of different types of indications of risk. One of the well-known indications is the VIX, the volatility index. If that's increasing in value, like we can see here, it's actually that one asset which is increasing most in value today, then that's indicating that cautiousness is increasing and the risk appetite of the market is declining. So that's going to pressure the stock market, not just the NASDAQ, but across the board. If that's going to start to decline, then we're going to get the opposite indication, ladies and gentlemen. So, for example, if I look at the week's performance, the VIX was actually declining. Okay, so you can see here the VIX at the bottom. It declined over the past 7 days, which is why over the past 7 days, the NASDAQ increased in value, mainly. So you can see here, this is another indication of a downward price movement for the NASDAQ. It's in line with what we're also seeing here as well. So you can see I'm also backing up this signal. Now, I've got one individual here that says, why is it declining so much in value so fast? I can see, sorry, it's a lady that's asked that question. I apologize. Let's go to the interest rates again. It's one of the easiest way to understand. Interest rates, like here, for example, this is the Chicago's exchange website, and it confirms every single month where there's an interest rate decision was the possibility of a rate cut. And you can see 92% at the moment believe there's not going to be a cut. But in an hour's time, less than an hour, the US market's going to open and that will start to change. And what you'll notice is the chances of a rate cut will start to increase and the chances of a rate pause will start to decrease. You will see that for May, you'll see that for June, and you'll see that for July as well. So that's something, of course, that we need to keep an eye on. What we want to see, if we want to see the NASDAQ decline, is the possibility of a pause remain. If we start to see a possibility of a cut increase in value, so for example, it goes from 7.7 to 30%, 40%, then the NASDAQ can start to find some support potentially. Again, that is based on economics. So, ladies and gentlemen, that is the NASDAQ. We've looked at signals, we've looked at technical analysis, we've also looked at fundamental analysis as well. What we are going to do, in addition to this, is start to look at other asset as well. Definitely an asset which is going to see a lot of volatility is oil and also gold. And I think everybody knows what's going to happen, ladies and gentlemen. Here we go. There's certain things which I've mentioned. The risk appetite of the market, the fact of a recession, possibility of a recession based on the news which is being released is really starting to trickle upwards. It's starting to be a pain in investors and institutions back, and that's going to create a lower risk appetite. So what happens is the market can potentially run to the safe haven assets. Again, one of those safe haven assets is of course gold. Now we said on the 3-minute time frame, 200 bar simple moving average is very important. Now we've had a few signals already, ladies and gentlemen. We had the breakout here. So after this breakout, we started to see an indication of upward price movement. We had, in addition to that, a crossover. We can see that crossover here. Then we had the retracement after increasing for a little bit. After that retracement, we can see the retracement here. 65% being regained is at this red line. So we can see again. Sorry, I got rid of the breakout as well. There we go. That's the breakout level. 65% is at this red line as well. Keeps on increasing in value, and then we're also above the 200 bar simple moving average, which is very important as well. So you can see this upward price movement. Why are we seeing this upward price movement? Very simply because the risk appetite of the market is starting to change again. Now we're below both trend lines. We're below the 50 level on the RSI as well. So you have to be cautious in regards to that, ladies and gentlemen, because that indication is actually indicating downward price movement, even though fundamentals is indicating upward price movement. So if we're going to meet somewhere in between in terms of the two analysis, it's potentially again that we're going to continue to abide by this range-bound trading conditions. Now, if we're going to look at range-bound trading conditions, let's say, for example, that does actually happen. We are going to see range-bound trading conditions. Then what's really important is what is known as the mean, basically the average price of that range. If we're looking at the average price of this range, ladies and gentlemen, that's 129 bars. So I'll confirm to everybody at the moment what the average is. 129 bars. There we go. The average of the range, ladies and gentlemen, is at this middle red line. That's the average of the range-bound trading conditions. That's extremely important. Why is it extremely important? Because if we look at mean reversion, what tends to happen is every time we go to support and resistance level, if mean reversion and range-bound trading conditions will persist, it will hit that average again. I can give you an example. Here we got to the support level. After that, it hit the average. Here we got to the resistance level. It hit the average. Resistance level again. It hit the average. Support level here. Again, it hit the average. Resistance hit the average. Support again. This was today. It's working its way up towards the average again. But what we need to be cautious of is that, we're trading along with momentum. So for example, here, that's the high, that's the low. We're all currently in a retracement. 65% momentum is at this level here. So we want to ensure we're trading along with momentum. We're not trading against the current momentum. We want to be trading with momentum as well. So potentially at that level is where we are going to actually see a signal. Then let's look at another asset. Now, I've got some people here that says if we can look at the Euro USD, someone says the Australian dollar against the US dollar. This is a good question, actually. What's the best performing currency of the day? What's the worst performing of the day? Definitely the worst performing is going to be the US dollar. I don't need to check that. I'm pretty sure it will be, but let's double check. Let's refresh this page. Of course, we'll have to wait for that US dollar to continue to decline. If it is declining, let's actually go to the MT5 first to see if it's declining. It's seen down and upward price movement. Down and upward price movement. Let's see though, once the core PCE price index comes in. If that comes in lower than expected, then interest rate cuts really become get onto the table. And if they're going to get onto the table, then maybe that's potentially where it'll start to decline. At the moment, those up and down price movement. So worst performing currencies of the day, just to answer this question, is the New Zealand dollar, the Japanese yen, and the British pound. And just so everybody is aware, also, the worst performing currencies of the day is the S&P 500 and the NASDAQ. The best performing, sorry, not currencies, indexes, is the NASDAQ and also the S&P 500. The best performing, which is still declining but declining less, is the German DAX, just so everybody's aware. Now, another thing which I said will have a clear direction and influence is, of course, oil. Oil later, actually, let's go to a 2-hour time frame, I think, for this, just for the moment. This is a 1 hour. Oil is seeing downward price movement, really started to gain momentum yesterday because that downward price movement was triggered by a fear that demand was going to drop. We already had that fear intact because of the trade policy, because of high interest rates, and because of the policy which is currently being taken globally. So we already had that fear, that was already intact. But the George job openings really triggered further momentum of downward price movement. Of course, the announcement which has just been taken place in terms of the gross domestic product and also the ADP employment change, that also is going to trigger those fears again. That's why we're seeing that downward price movement once more. Very clearly, we're below all trend lines. We're definitely very low on the RSI as well. We're currently trading 36. Not oversold. You know, we saw some oversold prices earlier on today. That's potentially why it retraced quite quickly, but not sustaining that price movement. It was just a quick spike and then lost momentum within less than an hour. But now we're seeing downward price movement again because of the news which has been released. If we're going to see a higher core PCE price index than that which was expected, especially if it's significantly higher, for example, if it remains at 2.8 or it increases to 2.9, that would be terrible. Then, of course, oil, can really decline again at a faster pace. Why? Because, we've got a weakening economy and the Federal Reserve is not going to give much attention to that just yet. They'll keep their attention on bringing inflation down, which at the moment expectations is that it's going to start to become more sticky because of the trade policy. 65% of the retracement, ladies and gentlemen, is here. So 65% is there. If it declines below that, then that's potentially an indication of further downward price movement. If people don't want to look at the latest retracement because that's ultra short term, they can look at the longer term, not longer term, but slightly longer retracement. If we're looking at the longer retracement, actually, that brings the exact signal at the same level. So the signal is still there, ladies and gentlemen, 65% of both the larger impulse wave and the shorter impulse wave. More or less the same. So that's where the main signal potentially may materialize if we're going to see downward price movement. That's a big if, ladies and gentlemen. If we're going to see that upward price movement for whatever reason, then of course we've got our resistant level here. There's some traders that will aim all the way up to the resistant level. Some traders, just to be safe, they won't keep it open the full way. So it's 0.60% to the resistant level. They may aim, for example, for 0.40% just to exit before that level in case it doesn't quite maintain momentum all the way out to the resistant level and to the point of previous collapse. So those are two options there. And if we're going to look at 0.40%, ladies and gentlemen, 0.40% is here. There's resistant levels which are also slightly below this level. Some are higher, resistant level, we've got a higher one here, but we've got 1, 2, 3, 4 lower resistant levels. But if we look at this, looking at 70% of the resistant level, then of course all those major resistant levels are intact. So even if we're not going to quite go up to the highest resistance and we're going to go to the lowest resistance, we will still hit our take profit. So oil, ladies and gentlemen, is going to be very, very interesting. Now, before we end today's webinar, let's start to look at currencies. I mean, one of the currency pairs which is most advantageous is, of course, the euro against the US dollar. Why is it the euro against the US dollar? Because it has the lowest spread, ladies and gentlemen. Extremely low spreads, even in times where we're seeing a lot of volatility. Let's go to a 1 hour chart. Euro USD. Previously, it was looking at mainly sideways price movement. You can see that here. But that's something, is it about to change? If it is about to change, the bias at the moment is actually that the US dollar will increase in value. So that's the bias at the moment. We need to be cautious that that may change, though, because of the news which has just been released. Again, especially if the core PCE price index comes in lower, because then there's a higher possibility of a rate cut. So if that's the case, ladies and gentlemen, then maybe this indications of the 2 hour time frame will change. At the moment, they're given a slight bearish bias. If we're given a bearish bias, then of course we can look at this breakout level here, or we can look at 65% of the overall impulse wave we've seen there. 65% is basically a sell trade. Now, if we drop by about 5 points, then that is an instant signal. That is a signal to speculate a decline. Like I said, or you could look at the breakout. The breakout's all the way down here, or you can look at the head and shoulder breakout, which is here. Those are two areas we can look at to signal downward price movement. If we get down to those levels, then we're also below our 200 bar simple moving average as well. Let's look at the British pound against the US dollar. That's seen a stronger downward decline in favor of the US dollar. This is also because the Bank of England has a rate decision tomorrow. Let's actually look at that on our calendar. So I'll add the UK. There we go. I've added the UK. Let's go to tomorrow. We also have President Trump speaking overnight. That will definitely create some volatility like it normally does. Anyway, here we go. Look at the UK here, ladies and gentlemen. We've got a lot of announcements in regards to institutions, mortgages, quantitative easing. But we also, tomorrow, ladies and gentlemen, apologies. Next week, we also have the Bank of England's rate decision. So if we go to the 8th, bear with me, not this week, next week. There we go. If we go to the 8th, here we go. Look at this. Interest rate decisions from the Bank of England. And if we go to the 7th, we have interest rate decisions from the Federal Reserve as well. That can create a lot of volatility. So that's something we need to keep an eye on and be sure to know that it will massively influence the British pound against the US dollar, the cable. Now, if we put this on the 2 hour time frame, it's given a bearish bias, okay, but actually we're at a level that potentially may start to find support. That will be in line with if the core PCE price index comes in lower than expected. But it's a lot of momentum downwards, but we've gone to our trend line. What happens when we go to the trend line? Look at this here. That's a trend line. We've got to that level and found support. Even if we go further back, ladies and gentlemen, to where it's not an upward trend, but it's a downward trend. For example, here you can see a downward trend. You can see, for example, there it went to the trend line here, it went to the trend line here, it went just above the trend line as well. So even when it's below, those trend lines still are intact. And we can use that. So the question now that we've gone to that level is, if that's going to bounce back up, especially when the market opens in less than 20 minutes, and especially in 50 minutes when the core PCE price index is released as well. That's going to create a lot of volatility instantly today. Overnight, we will have some volatility on the US dollar from earnings, but to be honest, quarterly earnings reports from Apple, which is tomorrow, Microsoft, which is today, Amazon, Meta, QComs, all these companies will create more volatility on the stock market rather than the US dollar. But it can also create it on the US dollar, of course. Now, let's go to very quickly the US dollar index. This is a 2-hour time frame. It's slightly retracing higher, not giving much confidence because it's retracing high, but it's a lot of up and down price movements. So we need to be cautious about that in regards to the US dollar index. Guys, the US dollar a lot of the time is used to help give a stronger and fairer indication of the US dollar's value and price movement. Here on the 3-minute time frame, we're back above our 200 bar simple moving average. So you need to be careful about trading against the US dollar. But like I said, this can change. It can change specifically when we're about to get an announcement from the core PCE price index. So, ladies and gentlemen, we've looked at the NASDAQ, we've looked at currencies, we've looked at Forex, we've looked at metals, gold, and oil as well. Is there, before we close today's live analysis and live market view, is there a specific asset you would like me to look at before we end today's session? And just so everybody's aware, ladies and gentlemen, here at HFM, you have access to copy trading where you can copy the trades of other traders if you wish. A lot of educational material, including live webinars where you can ask questions live and we have discussions live, including having polls, having surveys and live discussions. And generally speaking, there is a lot of educational material, super fast deposits, super fast withdrawals, which are always on time as well. So I cannot see any questions, and I cannot see if anybody is looking for me to analyze anything different other than what we already have analyzed. So I think let's end today's live market view. Hopefully you found it educational and informative. Enjoy the rest of your day. As always, trade safe, trade responsibly, and we'll see you again on our next live market view session or on the next live trading session, or of course on one of our live webinars. In the meantime, guys, enjoy the rest of your evening and take care. Goodbye.